Good morning and welcome back to another episode on the Coin King channel. I'm your host, Founder Crypto TA. I just wanted to give everyone a quick Saturday update. I know it's the weekend. I know the liquidity is rather low, and I do plan on posting my analysis. I just wanted to explain it as best as I could while I had the time to do so, because I'm not sure exactly what time I'm going to post this. What I'm looking at right now, I do think that we've come to a place where we're going to see some sort of a bounce to take place. What I'm noticing in the chart right now is that we did sweep the liquidity from yesterday's low. We are around the VWAP, and price is also creating liquidity just below. So where you see this first entry at here for a long position, you can see how when we got the drop here, we didn't take the liquidity from this low. Now this candle low right here is the huge daily candle. It's that huge daily candle that broke through that triangle formation that we had. So I'm assuming that price market makers are going to come down here and they're going to take the liquidity from this low right here. And from here, ideally, this is where I would like to see price action get the bounce. Now, I'm leaving it here, even though I think that price can drop a little bit below here where the stop is located at. So in the event that market makers do come down here and take this equal low liquidity that we've now created here by sweeping that daily low, that you want to see this price, this level be reclaimed before you consider entering this position. Because if we don't manage to reclaim here, meaning that we're closing back inside of this range, we're treating it as support, then we have a chance to go lower. Now, that next level, which is not ideally the level that I would like to take the entry from, is important. It's important to identify it and say this is the line in the sand, because if we're not making the move from this final entry target here, then the liquidity here stands to be taken. So this is going to be the second area here that I'm going to consider, where we have these relatively equal lows in here. We also put in a range in here as well. So there's going to be some pretty good liquidity right here. But the one that I'm most interested in, as I see that 4 hours starting to slow down a lot now, is this area right here. This is the one right here. Ultimately, if we do this one, I lean more towards us taking the liquidity from the high here. Now, I didn't set to take profit above this high. But if we're going to continue, I would say that this is the one that does it right here. Now with this one right here, also you're going to have your golden pocket retracement. So if you're pulling from this absolute low here to the top there, that's where you're going to see the golden pocket is located at as well. You can see that. So we drop down, we take the liquidity from these equal lows right here into this golden pocket. And then we want to see if we don't bounce immediately and we sweep a little bit lower, because you're going to have stops below here. We sweep a little bit lower, and you want to make sure price reclaims into here before you consider taking the position. Okay, please make sure that you do that, because we don't want to see a swing fail back into this area and then we continue down here to the next level here, which when I looked at it, I realized that the 786 was located close to this area right here. So I'm going to put on the 786. I'm just going to put on my like this. So you'll see at this next liquidity level here, which is the next, which would be my next entry of interest. But I'm very, very, very cautious about the entry here. Again, the one that's here puts you closer to this trend line right here. Trend lines have good liquidity. And if you're drawing this trend line, you need to draw it exactly like this. I think I told you guys this the last time. Do not do the channel anymore, not in terms of liquidity. The liquidity sits on this trend line right here. The same way we bounced exactly from this trend line right here. They were not ready to take the liquidity over this trend line, but we come back down here, we tap this again, we might take the liquidity below here. Same thing happened right here. We took the liquidity from what used to be our channel. So right here, you can see right here how we first two touches created the point. We bounced off of the third one right there. We came back. This time we did what? We broke it. So we've already taken the liquidity from this demand line right here. Be careful with this entry here and the possibility of breaking below here and taking the liquidity down here. that could set us up to take the liquidity from even deeper, which is going to be the bottom side of our range, which comes in at $60,000. Okay. I'm under the impression that we will continue higher. That's my thoughts. I'm under the impression that we're going to go higher. We're going to take some more liquidity from the upside, but we have to have a pro and a con. Depends on if you're bullish or bearish. Okay. For me, that's my con. That's my bearish down here. But equal liquidity in here. Another thing too, I'm going to show you in here. So you all know that I'm long. I'm short from this area up here. So I shorted up here. This is my short. I'm still holding. This is still mark price. And I've already taken profit out of this 3 times already. So I'm not really concerned about that. Now the last long position that I took was right in here. So I have, there's a chance that I get taken out of that long position. So I'm desperately going to be looking for another one. But this will be the last place of entry that I would be interested in. And I'm really scared about this one right here. Really want it to be this right here and just taking this equal low liquidity right here. So let's look at something else that's also important here. So I put the VWAP on right here, and I put VWAP is really, really good for a consolidation range. Love it for consolidation range. You'll see how many times with our levels that we had in here for our daily that we actually respected these points of interest here on the VWAP. So you can see right here around about where we have the golden pocket at right now. So we're hanging on to this VWAP right here. We slipped below it when we took the liquidity from the daily low. But if you were looking at the fib retracement from, you'd still be up under this right here. You still slightly be up under the golden pocket from this pivot right here. But that's what you're around right here. And then the 786 will be right here. So this is the one. This long right here. This is the one. You can see the numbers out here. I click on it too, just so you can see like what the entry and everything is that I'm looking at for that. So the entry price, this is just using the Binance chart, but you can go back to your chart and just mark that out, mark out your golden pocket, add your VWAP, which is pulled from the 60,000, plotted from the $60,000 low. Okay. So entry 67,400. The profit level is 73, 611, 67. That's slightly before we tap into this high right here. So you can always change that. You don't have to go by anything I have in here exactly. It's not financial advice. And then the stop loss is 66,848.93. The reason why I did the stop like that, I'm going to explain that to you because it doesn't have anything to do with the fib retracement. It has to do with the fib extension. Okay. So that is that. That is that. And you can see where your standard one right below VWAP comes in down here with this 786 with this area of liquidity that sits right here as well. Semi-equal lows right here. Definitely an equal low right here. Definitely a place. And I want this to happen first. Because if this happens first, then guess what? We built liquidity up above us. You see all of these little boxes that I have in here, these little areas in here, the inside ranges. Those are areas where liquidity is sitting. That's where consolidation is at. That's places that market makers can look to come back to. So all of these areas are right through here. This is about a 5 waiver too. This could be an ending. If you're looking closely, right here. Let me see if I even have this in here. May not have it there. Let's see if I have. Okay, so you can see it right here. This is exactly what's happening in that area right now. Let me take this away. But that area right here, this is what's happening. We're putting in this ending, sort of ending diagonal right here. Now we did take the liquidity and swing failed right there, and you can see we came back and back tested right there. We took the liquidity from here. So if we drop down into that area first, undoubtedly we're going to come back up and we're going to take that liquidity from this trend line right here. And this right here, I'm gonna have to move it now. Let's set it just like that now since we've already swept above it once already. So that's the anchored VWAP. Yeah. So you can see how we're sitting on the anchor VWAP already. I really don't want that to happen first because it could just be taking the liquidity here and then rolling down. This is that same zone that I'm talking about us getting that bounce from. I can lower this to this candle low right here. So to be exactly like I'm looking at it on the 1 hour time frame. But that's taking this liquidity. Again, what we have these equals down through here. That's taking this liquidity right here. That's where the golden pocket is at, right in here. So come down, take that, and maybe even be able to use this trend line right here. We may be able to use that, but I'm gonna explain to you why I chose what I did choose. I was using the fib extension on it. So here on the extension, this is a 1-to-1 right here. This is our 1-to-1. It depends on how you're counting this, but this is our 1-to-1 right here. And then just below that 1-to-1 is the 1.272. Let's see. Yeah, 1.272. That's what I'm using as the stop right here. The 1.272 is the stop. So you can see how that number matches up exactly. That's 6848.93. That matches up exactly, but you're not looking to take your entry from there. You have to wait. Make sure that the market is showing us that it wants to bounce from the area. If once this liquidity is taken right here, we need to make sure that the market is showing us that it wants to bounce from this area. That's all the liquidity they want. If not, then guess what? Guess what else? 1.618 right here with standard one, with 786, with a pool of liquidity. So we got some good stuff to watch right here. I just wanted to make sure I explained it to you before I post it because it's going to be a little time before I actually get around to posting it. I'm still kind of studying it right now just to make sure um, that I'm doing my best. that I'm doing my best um, right in here. Let's see. Is there anything else in here? I don't think that there was. I don't think that there was anything else in here that I needed to cover. Let me just make sure from a daily. I'm just gonna take this other stuff back off. Take that off. Oh, and if you needed to draw out this fib extension, I explain to you how that's done. For this fib extension right here, it is simply going from this top, the one right here, to this low right here, and then back into this top right here, back into this top right here. Because for me, what this looks like, in my opinion, uh, I may have actually, if I did it, then it's on that 15-minute time frame. So it looks like we might be trying to get that little drop right now. It's the weekend, so it's almost hard to trust, because it is the weekend. It is the weekend. This is our a daily level of support as well, right through here. We've been challenging it quite a bit. Assist the Bollinger Band. That's the 20 SMA in the Bollinger Band. I actually took a scalp long from here last night yesterday when we tapped down here into it. Um, that's initially where I was looking at, I was saying to you on Thursday that I felt like the market was going to come down and they were going to take that liquidity. It was just enticing. That was my feeling. I didn't feel like we would come down here back to the lows, but I did feel like that liquidity that was sitting in here would get taken on a move, that to expect for that to happen first. It went a little further than I anticipated, but I understood that from that point, price actually started to diverge. So that move up from that point was a very weak move. I should have given more thought to that because it was such a weak move up, that price would just actually just nuke straight through it because there just wasn't enough money piling in right there. More people were shorting than longing from that area. So the demand wasn't a lot right there in that area. So my bad. But we're resting around a daily zone right here. Also resting around that daily zone right there. Um, and you can see how that next. Let me see if I sync this. I just want to use these levels instead. I have them on the other chart, but I'm just going to sync it and then work off of that instead. Let me do it from here. Yeah. So you can see how we tapped, and we're respecting this. Respecting this so far. Respecting this daily level in here, and then that next daily level sits here, but the low of that is down here. So it is a matter of breaking and reclaiming it, really. You just need to be able to reclaim the zone. Because on the daily, these are wicks. This is body closures on the daily. So it looks a little different looking at it from here. So we wanna see the exact same thing happen. I hope I didn't confuse you by throwing these dailies in here. Like I said, from a daily perspective, these are wicks down below here. There are no closures there, and that's the difference. That's why these levels, tend to work or why price tends to reclaim back above them. Let me unsync it so there's not too much confusion on that. But yes, that is what I'm watching for Bitcoin. That is what I'm watching for. Volume changed a lot too. Volume absolutely changed a lot. That, here, let me see volume, talking about the 4-hour. Mm, you can see the volume from here, and so we switched, and we started creating. I mean, volume is gonna do this anyway because we're creating a pattern through here. So we're trapped between support and resistance, or, bulls and bears are trying to make a decision right through here. Market makers are the ones that make the decision actually, but it's a battle going on between this ending, sort of ending or falling wedge triangular formation right here at the lows. See anything else from that pattern? Let's see anything really from here. Um, yeah, so this was the liquidity that I was saying to you on Thursday that I felt like market makers were going to come down here and take this liquidity right here. At the time, we had not even finished playing out the head and shoulder measure move just yet. And I kept saying, I think that they're going to come for this because this is where we started to put in bear divs right here on a five, in my opinion. One, two, three, four, and then five. So that was our cool off point right there. And then I started looking at this, and I thought to myself, um, to this. And then I think I had it stopped when I was last looking at it. Yeah, something like that. but we're still in this fallen pizza pattern right now. Fallen pizza pattern. My idea is somewhere, but I can't tell you where it is. Maybe this happens while we're watching. I hate to rush off, and we're in the midst of what could be. I know it's not an inverse. I know that much. I know it's not an inverse right here. And then you saw the pattern. That's not an inverse pattern. Not looking at the 4 hour or the daily or the daily. The daily, to be honest with you, if you just look at the daily. Anytime you see a large candle and then you see a doji just down, anytime you see this, a large candle like this, and you see a half body with two wicks and it's sitting just below here, that's the formation of a fallen pizza or a diagonal pattern. That's what you're seeing anytime you see this right here. Anytime you see that, that's what you're seeing. Large candle and a smaller body size, just like this, around the low. I like to see it close back above the wick right here. But that's what that pattern is. It's not an inverse. So I want to look at that like an inverse. It was the same thing over here, right here on this 4 hour before we got these additional candles in here as well. The inverse is going to be three three candle formation like this. One, two, three. It's going to be a three candle formation like that. It's not going to be what we were just saying. Yeah, it's going to be something like, well, we got a picture. It's going to be a three candle though. It's not going to be that. It's not going to be two candles. I just noticed Ada too, so it turns out that I was correct about Ada. Um, I'll talk about that after we get through what's happening right here. I do know for a fact that there was a rising pattern here, and so I expected for us to drop down off. You can see it right here off of the RSI as well. See that rising pattern? So the bear did rising pattern right there. On Thursday, my indicator flashed off. We had came into the 786 right here. So that rejection. And then you can see from the candle formation, and then got a couple of indicator signals as well of a short position right here, which I said to you, I'm not taking it because I thought I was already in the short already. But I wasn't a genius because it came back up there, right? It came back up there. Um, we put in another rising wedge right here with this candle. You can 15-minute time frame. We are just is building on liquidity above here. And if I'm wrong, if the market gives me a reason to have to look at it later, entry later, that's fine. It's the weekend. I'm not really not tripping over it. And if you're looking at this from the daily, this order block right here, because when I tweeted on it, I mentioned the order block. That was what price was at, this order block. You can see the order block right here. But we went through that order block with that daily sweep right there. Didn't close below it, but we still swept it. But the same order block is where the momentum kicked in at on that daily time frame too. So initially, I had a trend line. I had the order block drawn out, but I had the trend line right here because you can see that's where the range was at. That was the start of this range right here. Before we swept this range to make that move up. All these little wicks up here to the upside, that was liquidity building to the upside. So we knew if, I mean, it was a good chance that price action would break through and take this liquidity. We kept hammering it. We weren't getting through. We came down. I talked about this too. I said we came down and we swept that liquidity and then we pushed it up. So it's a beautiful order block. And it's been holding here. I just think that we built in this liquidity down here now. And, you know, I wouldn't be surprised if that was taken. But we're expecting some sort of an explosive move so far. This range right here, let's sweep to the downside. This range right here, this one, got to sweep to the downside. This range right here, got to sweep to the downside. So to me, we're hammering the lows. We're hammering the lows. So I want to see us drop down and take that liquidity and then push out and up. You can consider taking profit from these areas right here if it plays out in our favor, which I would. I think go higher. Wow, this is going higher. I think we close to be everything. Speaking of the weekly close, I'm pretty sure that we rejected. I didn't do a video on. Um, I didn't do a video on Friday. Now on the weekly, these are weekly levels. They're not the same as what you see on the other chart. They're weekly levels, but we discussed that. And we talked about we hit the standard deviation one, which is where I said I felt like price action could get to. And that's exactly what we had tapped. And I did share that on Wednesday. That was another reason on my short as well right there for the standard deviation one. I said based on how the volume bands our position, we can easily get to this right here. We could easily run through any of this, but this right here was definitely a marker right here. And I don't put much weight on the wicks as much, but it was also a wick test as well. Um, when I did the analysis, it was based on getting to that standard deviation one there, and then getting to the top side, let's take the liquidity from here, sweep this liquidity into the top side of our descending channel right here. And then what happens from there happens from there. But that's my thought. That's my thought process on this. So right here, this is what I really wanted to get to. And I don't know why that disappeared because I know that we were looking at, yeah, I think we had actually tapped here. And we were going to break through, tap there, and then we cooled off from it. But we actually tapped this over the weekend. I mean, over the week during the weekdays, we actually tapped this, and that was where our rejection came from also. So we're just waiting to get through this, waiting to break through this. This is gonna look, terrible. And I said that on Thursday too. I said the daily is gonna look terrible because those candles are gonna come back down. They're gonna be red. It's gonna look bad. Everybody's gonna say now we're going to 30,000. Um, and maybe they're right. I don't know. I just knew that that was going to be the talk that everybody was going to start spewing. We're going to 30,000 now. We're going to whatever the lower level is. Everybody's going to say, trap, we're going there. And I hope that's wrong. I hope that's wrong. This tells me, this right here indicates, now it doesn't tell me when, it doesn't tell me how, it doesn't tell me how high. It sits like this, it tends to push prices to the upside. When it sits like this, it tends to push prices to the downside. This is a squeeze that breaks to the upside more than not. And I'm waiting on this liquidity. And what do I know? It just makes sense to me. We started selling off on Friday, on Thursday, but I told you I said more than likely we would sell on Friday. Why? Because it was more calls on Friday. It was way more calls. Price had price had pumped a lot. We come to Friday, they start closing out those positions. Of course, they start closing out those positions, and then price slips. We did that when we had a whole bunch of puts in the market. Remember on Fridays we would pump. Does anybody remember that? Our pumps would be on Fridays because of put contracts. A lot of that had to do with put contracts expiring. So we would see us pump on Fridays. It's not a Friday. Actually, let me go to the daily. Let me just see how we did. That's a Tuesday. I think it was like the last 2 Fridays where we saw us pump. Yeah, so that was our low, and then I don't know what happened right there. It happened though. We would pump. We came up first. I know that we were pumping on Fridays. I just know that much was true. That wasn't Friday. And this is another good example right here of us seeing the pump on a Friday. But I know that those last 2 times we had pumped on a Friday because it was a lot of puts in the market, and then those Fridays we got pumped. I guess we're just chilling around this level right now. Okay, so we might just continue this song and dance. Anyway, I explained to you what it is that I'm looking for. I just wanted to make sure I put that out there. When I do get a chance, because I'm still going through some things, I will post, my analysis. It'll be a lot to read. The video just made it a lot easier. for me to just say what it is that I'm looking at and explain to you why I'm looking at it. And it's more than just a simple fib retracement. It's more than that. And what you're, what you need to be concerned about, um, if for any reason they thrust us lower, just say we don't have enough demand here to take prices up. We don't, and we come down into here, if we don't have enough demand in here, then they may take this liquidity right here. We need fuel. We need fuel to go higher. We need fuel. And obviously, we're back testing the area that we got the breakout from. This is the scene of the crime. This is where we actually broke to the upside, broke that wedge structure right here. This is where we broke it from right here. So if it was a true breakout, which you look at that volume suggests that it was. That Friday volume suggests that it was a true breakout. They're testing it to see if it was real. They're still going to test it to see if it's real. And they make money off of liquidity zones. They're here to take your money. So hopefully that is it. But liquidity, I mean the volume suggests that the move was not a fake move. Even here you see the volume rolling through. Even here you see the volume. But definitely when I look at the volume here, which I don't have it on. Of course I wouldn't have it on. Look at the volume. Volume suggests that it was a real push. It was a real push up. There was enough volume here. It was higher than the volume over here. It was higher than the push that volume for this push into here. It was higher. So volume was increasing. That I know for sure. I wanted to say that this was a three method. With the three method though, I know a lot of people don't like for price to take out the low. But that will happen sometimes. You'll get a sweep. That's why that entry, if it's just a sweep, it's just a sweep, and we move from it, it's a good entry because this could just be a three falling method right here. Let me see if I can show you what that looks like because I don't have it. I was working on some stuff. Oh, three rising method. Hold on. Like, girl, do you even know? Yeah, my bad. My bad, everybody. Three rising. I'm gonna find you a good example. Okay, right here. Here's a good example. Right here. Let me see if I can't just copy that image and paste it in here. They probably won't just let me paste. Oh, they do just let you paste now. Okay, so there you have it. So it's like this. This is what a three rising method looks like. You got a big green candle. You got three reds right here. A lot of people don't like for that low to get taken. I'm okay with that as long as it's just a sweep. As long as it's just a sweep, I'm okay with it. And then the next candle opens up when it sends prices back up to the side. That's what I'm looking at right here. That's my opinion. It's my opinion. But that could be what we have. It looks bearish as crap. It looks bearish, but it tends to not be. I like that. I'll keep that image. I'm doing my own. Oh, hold on. What did I do? Oh no, no sync. That's where I'm at here on this. All right, we're just gonna chill right here, I suppose. Again, I'm down to Crypto TA. You can follow me on X at down to Crypto TA. You can also follow the Coin King at the Coin King, D as in Diamond, A as in Alpha, Coin King. Um, that's it. I appreciate you for joining me today. I'll get this out there as soon as I can. Enjoy the rest of your Saturday.